What's up, guys? Excalibur here. Just want to do a very quick video on supply and demand. My mentorship group, you definitely will get a lot more details. I just want to quickly go over supply and demand, kind of what I do on my one-on-ones. But here we got the supply zone. I'm going to show you guys how to chart these after this, but supply zone is on top. A demand zone is on bottom. I like to say you demand to buy and you demand to buy. That's how I remember it. But basically, you're coming. Demand zones are formed where buyers like to come in and push the price up. So the whole concept behind supply and demand is buy where buyers buy and sell where sellers sell. Try to be smart money, not try to be dumb money. So if buyers buy once and we create a demand zone, you more times than likely we're going to come down to that same price and buyers are going to buy in again. Same with supply. We have a big sell-off, then our supply is created. When we come back into that area, more times than not, we are going to sell off again. We'll just go over. I'm going to show you guys just 1 hour on SPY. I'm not going to go into different time frames. Just go on to the 1 hour, and we'll actually go to the 2 hour. Let's go to the 2 hour on SPY and just start charting supply and demand zones. So we'll start right here on February or April 28th. I can see we have a nice push up and then, basically big sell off here. That's what you're looking for. You're looking for big candles or consecutive candles in a row, sell off here. What you want to do is it depends on how you personally like to do it. Some people take from the wick to wick. I personally like to take from the open to the high on top and the open to the low on the bottom. So right here on the 2 hour, we create a supply. So we have there's 4 different ones. We have a rally, we based, and then we have a drop. So you're looking for that basing candle, that last bullish candle before that sell off. Doesn't have to be like a big candle like this. We had a sell off. This is consecutive candles. We sold off 5%, basically, down 5%. Concept is when we get back to this price, we'll sell off again. What do? We get back to that price and boom, we sold off very strong. So that supply worked. But also on the downside, we have demands too. So, after that sell off, we kind of based here and we had a nice push up. So we could do this right here. We have a demand here. We wait for price to get back into that demand right here. And we had a decent push up. 2%. Still a killer. If you're in contracts, option contracts, you killed that right there if you got in. A 1% move in SPY and with with a good entrance and a good contract, you definitely killed that right there. We'll just go randomly back and just try to find some more. So we have a nice push up. So there's also something called we have a drop. I'll go through all of them. Show them right here. We have a rally, base, rally. And then what I like to do is RBR. We'll have a drop, base, drop. That's a drop, base, drop. We'll have a rally, base, drop, and then we'll have a drop, base, rally. So those are the 4 we look for. I really love the rally base rallies and drop base drops. But we'll just mark this up too. This is a rally base drop, and then a drop base rally. So those are the four. Basically, on this one, you have a strong push up, and then price kind of consolidates sideways. They agree on price a little bit, and then buyers shoot it up again. So you want that price to come back to there. So let's just randomly find some 2-hour supplies. So this is your, we'll go, right here we have a drop, a big push up, but you can tell how we pushed up at open. We opened, we went sideways, and then we opened. So we have a rally, base rally. So I like to mark that up. And look, where do we bounce? When we get back to that zone. Nice bounce there. And then look at this one. Another, I mean, we went to the moon on that one. Also up here, we rallied and we're kind of looking for where we drop. These aren't significant drops. There's really no small buy candle before a sell candle, possibly like right here. But these aren't really that significant of drops, kind of trying to find a drop. We dropped here, we kind of rallied, but we could kind of do a little zone here, but it's not high confirmation. We just kind of dropped fast and sold, bought in fast. So there's really no, base there. There's kind of just a, use a pivot. But then right here, we kind of have a sell-off. We based, we sold off again, but we had a really nice base here. We based for, you gotta look at it. This is the 2-hour. So for 1, 2, 3, 4, basically 5 2 hours, they agreed on price between 431 and 428. So that's a pretty solid base. So I like to take that last candle before that big sell-off. And then you can tell we came back, we kind of sold off a little bit, but not that big. This is kind of more of a advanced technique on why we didn't sell off, but a lot of things, what I like to tell people is your trend is your friend. If we're going up, if the price is going up, I love demands. If price is going down, you kind of want to love supplies. You can tell we had a reverse here, so price was going up, so supplies are not going to be as strong. You kind of want to wait for a demand bounce. But that's more of a advanced technique of why we broke through that. But we, you got to that zone. We sold off not bad. Almost a 1%. If you like kind of averaged it down a couple times or maybe once, you probably would have profited. Just find a few more. Just a few more random ones. Go recent price action from when this video was made, where we had, we had a nice drop here. We had a little basic candle, and then a nice push up. You can tell we kind of hit this, and we kept hitting it, kept pushing up, kept hitting it, pushing up. And eventually we fell through it. I love to take the first time it hits. So, if we drop down to kind of a lower time frame, that first time it hit this zone is most likely where I would have got in, where basically that open. We opened in that zone. I would have got calls at open. And that's a 0.83% move on SPY. At open, you're good. You could definitely take it again. If you don't want to get it open, you could take it here, where you sell, kind of start reversing the trend, and we push up from there. Nice 1.24. The more times we touch this, the weaker it becomes, because the concept behind this is you want to buy where buyers are buying, but if they are bought here, there's going to be less buyers buying here, less buyers buying here. And I always like to tell people it's kind of like a bouncing ball. So if you throw the ball at the ground, it's going to bounce off and it's going to make little, and then I always say it likes to fall through. So definitely the strongest bounce is going to be at that initial one. So, well, if demand's created here, the second most strongest bounce is going to be that second one when that initial. With supply and demand, you could go to the multiple, you go higher time frames. You could do weeklies, you could do monthlies. I showed UPS on a weekly time frame right here. So without looking at where we bounced, we had just kind of this, we're just basing right here, but then eventually we had a nice sell. So I took that demand, and then we had that one kind of super small week, and then a huge push up. It was on earnings. Earnings definitely helps because you have a lot of buy orders after hours, and a lot of them don't get filled. So on earnings, I'm definitely looking for price to come back to that earnings price, 179, and expect it to bounce. This stock moved 26%. So I always like to say if we catch half that move, like a 12%, 14%, 13%, whatever half is, no, that's still killer. A 13% move on UPS when you have the right contract. So we get, we start slowly coming down, and what we do as soon as we hit that zone, we bounce up right here. Would have taken calls here, 179, stock hit 220, killer. And then look, we created a what? We had a drop base, and then look at this another huge candle on earnings. So you wait for price to come back to that earnings price, and look, one bounce there, two bounces, and eventually what do? We break through. And then this is an example, your first bounce is going to be your best entrance. This bounce, yeah, we did bounce, but not as strong, and eventually look, we fell through, and actually we're bouncing from this original um, base rally. But that's pretty much going to do it on supply and demand. Takes a lot of practice to know how to chart your candles, but what I like to do is look for these just the big candles or big sell-offs, and you kind of mark that up, and then you wait for price to get back into it and just see how it reacts, and then you can tell, look, we sold off. So it's gonna be, I like from the open to the highs. Sometimes it does get tricky, but with the higher time frames, you got a kind of higher conviction and a lot easier, but plays take a little longer to get back into this. July 21st to October, it almost took 5 6 months, 5 months to get back into it, and then we dropped again. So higher time frames, it takes the play to develop a little bit longer, but your conviction is a lot higher. You definitely could, you know, load up here and make profit when you sell down here. But that was a nice, simple supply and demand. Um, may not work for you. I love it. Works for me. Just try to trade whatever works best for you. That's what you got to remember. It's your money. You're trading. Try to find the best strategy for you. But that's going to end this. Definitely, you guys have a great rest of your day.